Hello and welcome. You're watching this Business Today TV special. I'm Sakshi Batra, and on this show, we're going to focus on one stock which has been the butt of all jokes, but now is giving a great comeback to all the memes in the past about its underperformance vis-a-vis the stock markets. Well, no prizes for guessing. I'm talking about ITC. And in this video, we are going to be doing a deep dive into ITC to really understand what is really lighting up the stock right now. ITC shares have risen over 21% in this calendar year so far, when the Sensex is down about 13% in the same period. And not just that, it has substantially outperformed the Nifty FMCG index too, which has also slipped by 1% in calendar year 2022 so far. Now, to put this performance in perspective, ITC shares had actually corrected 10% in 4 years from calendar year 2017 to 2021, when the Nifty FMCG had actually soared about 81% in the same period. Behind ITC's underperformance have been many reasons, such as the tax hikes on tobacco. Now, since the company has a major operation in the sin goods, there are also concerns such as environment, social and governance, or the ESG concerns as it is called, that has actually led to massive derating in the valuation multiples as well. Also, many bets for the company have gone wrong in the past. In 2013, ICICI had to step in to rescue ITC's NBFC firm, ITC Classic Finance Limited. In 2019, the company had to shut the premium retail brand, Will's Lifestyle. It also had to sell John Players to Reliance Retail, as both were actually loss-making firms. Also, 2 years of COVID pandemic really impacted the cigarette demand as people turned health conscious during the time. So now the question is, why are ITC shares suddenly in demand? Now, to find out the answer to this and also to what the future holds for ITC investors, I got in a conversation with Avinnash Gorakssakar, Director Research, Profitmart Securities. Listen in. Mr. Gorakssakar, first up, that's the big question, what's really leading to this very sharp up move in the ITC stocks?
I think, first of all, Sakshi, please remember that ITC has always been a defensive stock. I think when the market corrects sharply, this is one stock which gives a lot of capital protection. But I think finally what worked for ITC was that FY22 was a very great year. In fact, if you look at all their businesses, the cigarette business recorded a very strong volume growth. The paper business recorded a 22% top line growth. The agri business also recorded a 30% growth. And overall, even the hotel business, I think the occupancy levels have shooted up. You don't get hotels that easily nowadays. So I think, all the pieces of the jumble, actually fitted properly. The earnings also came in very solid. And most importantly, ITC has always been a very high dividend payout company. For FY22, the payout was almost 93%. And this is as per their corporate policy of distributing 80 to 85% of the profit. So I think everything came so well.
So what is the reason of its outperformance vis-a-vis its other peers? We've seen the Nifty FMCG also is just about 1 or 2% up in this calendar year, whereas given that outperformance, the other consumer firms have been quite hammered in this time. So could you help us understand that reason as well?
I think to a large extent, I think ITC was able to take care of the cost-push inflationary pressures as far as the raw material costs are concerned, because you must have seen all the FMCG companies actually had a problem of volume growth, and on the other hand, basic raw materials like palm oil and other input prices had gone up. On the other hand, ITC could manage their costs better, and I think they have a diversified business revenue. As I said, apart from the FMCG business, the snack business, as well as the perfumes business, I think they also had obviously the mother business, the cigarette business, which do very well. The paper and the hotel business also did well, and they have the agri business, which is called as the e-chopal. There also I think the exports took off quite well. So I think all said and done, the diversification of the revenue helped them better, and I think they were able to take care of their input costs, in fact, better than their other comparative peers, like the Levers or the Daburs of the world. So I think to that extent, it did a commendable job.
How has the company been performing financially, and what gives you the confidence that it will continue to post good numbers even going forward?
See, I think within the entire revenue mix, I think two segments are going to do very well. I think hotels and paper are in great demand. Hotels, as I understand, after the unlocking has happened, traveling has increased significantly. As we move towards normalcy, the hotel business is very significant because it's the second largest hotel group after Indian hotels. They have a large geographical exposure, not only in the premium, but in the mid-size hotels categories also. So, my confidence is saying that, the hotel business will definitely deliver very strong growth even in 23. And as far as the paper business is concerned, paper prices globally have shot up. There's a shortage of capacities, and ITC is into premium notebooks, stationery, as well as premium paper. So obviously prices are going to move up. As far as the cigarette business is concerned, at least as of now, there doesn't seem to be any problem in the cement consumption trends. I think as more and more establishments are open, I think definitely this volume growth could be sustained. It could be about 7 to 8%. My sense is the agri business also is now going to be a very important element, because at the end of the day, with the kind of geopolitical problems faced by Ukraine, Russia, food grain exports are going to be a very important determinant for any company. So to that extent, ITC benefits. And so, my gut feeling is that all the products and all the, segments are doing pretty well. So unlike, maybe what we faced last year in the month of June, July, demand is again pretty strong. And if they are able to maintain their margins, then I think the markets are looking at steady growth in numbers even for FY 22-23. So, that is why I'm pretty confident that even at these levels, there could be good amount of, value buying or maybe fund-based buying in the stock, because earnings are definitely visible, and these are definitely very much possible. There's no, deceleration in the earnings growth, which most people are expecting in other sectors over the next couple of quarters.
Okay, understood that. Now, going forward from here, what could be the possible positive triggers for the stock going forward, or possible risks also, which investors must keep in mind?
Yeah, I think the biggest risk is, I think, if COVID cases continue to go up, I think we have a fourth COVID wave, which is very large. Then I think it could obviously impact the business, because, when normal movement gets impacted, you'd obviously find that, segments like FMCG, which are directly B2C kind of customer segments, or for that reason, the cigarette segment could get, hit quite significantly. Even the hotel business could get hit. So one is obviously the COVID factor. And secondly, if inflation doesn't come down, we will see further high inflation levels and input prices continue to go up. Food inflation doesn't come down, then I think it's going to impact ITC, because to a large extent, food inflation is a very important ingredient and a driver for ITC. If food inflation comes down quickly, then you could see a further re-rating in the stock. As of now, at least no indication, but I think these could be the kind of negatives. And positives, as I told you, I think everything looks good as of now.
Is ITC a re-rating candidate as of now? Can it rise further from these current levels beyond the 20% uptake that we've seen year to date? And by how much do you expect ITC to give a return to its investors?
Yeah, I think, Sakshi, people who did not buy the stock at 180 or 185, I think have definitely missed a good opportunity. But I think even at these levels, if you see the valuations, our expectation is that we could see earnings of at least about 14 or 14 and a half rupees for FY23, which gives a multiple of at least 19 times. Now, for a market leader which generates an ROE of almost 25%, a free cash flow yield of 5%, and which generates a free cash flow of almost 12,300 crores every year, I think this valuation multiple looks pretty cheap. So I would believe that, one could comfortably see levels of 320 or 330 over the next, say, 6 to 12 months. And I think you need to believe in the company, because this is a slow mover. So it doesn't matter that, you buy it today or tomorrow. But I think in these weak markets, it will add a lot of comfort and conviction to your portfolio. So I think 6 to 12 months, 320, 330 looks a reasonably achievable target.
Right. So last question to you, 320, 330 kind of levels over the next 6 to 12 months. But we've seen that traditionally, nobody really looks at ITC as a multi-bagger stock. Like you yourself said, it's a high dividend paying, stock. So one really looks at it as a dividend providing stock to their portfolio. What is that one reason that you believe investors should look at ITC as a good portfolio long-term stock?
I think, see, first of all, ITC cannot be looked upon as a multi-bagger stock, because the business is pretty large. Last year, the revenue itself, Sakshi, was more than 60,000 crores. The profit after tax was almost 15,300 crores. So the base effect is very large. So in such kind of companies, it would be little irrational to expect a multi-bagger, because these are very well covered stocks, by the institutions, by the funds, etc. So my sense is that whoever buys this stock, especially if a retail investor buys this stock, he should take at least a 18 to 24 month view to keep a core holding in the in the portfolio, because this company will obviously give you that kind of stability in difficult times, because today the markets are very volatile. There's a lot of capitulation which is seen in mid caps today. So I think these times, this kind of stock in the portfolio will give a lot of maturity and stableness to the portfolio. So I think wealth will be created. But yes, you have to take a longer term view. ITC is not something which can give returns in the short term, but in the longer term, say over the next say 1 to 2 years or 3 years, it can definitely add a lot of value.
And that was a bullish take on ITC. Now, to sum it up all, ITC shares have been rallying as investors are seeing value in ITC, which has been a beaten down stock. Also, as a company, it generates cash flow and holds an attractive dividend yield. Now, despite the outperformance in 2022, experts say the stock could actually rise further, as the stock is still down about 20% lower than its all-time high levels of 342 rupees. But what is also essential is for its continuing up run is that diversification beyond the cigarette business is key for the company. Some experts also believe a demerger of the FMCG and others business and the listing of its IT business may also unlock value for its shareholders. And now things will also depend on how ITC really deals with the skyrocketing inflation going forward from here, and all of these together will decide whether the future of ITC is going to be smoking hot.
If you like the video, do like, comment, share and subscribe.